Somewhere in the Persian Gulf right now, there is a captain on the bridge of a supertanker, a ship longer than 3 football fields, carrying close to 2 million barrels of crude oil. This route is familiar. It has been sailed hundreds of times before. But today, the ship is waiting, not for weather, not for traffic. It is waiting for clarity. Because in 2026, passage through the Strait of Hormuz, the most important maritime choke point on Earth, is no longer assumed. Every day, roughly 1/5 of the world's oil and gas normally flows through this narrow corridor. Saudi crude, Qatari gas, Emirati oil, all of it squeezing between Iran's coastline and the tip of Oman before spreading out to fuel the global economy. For decades, the assumption was simple. The strait was too important to interfere with, too essential to be weaponized. That assumption is now under strain. To understand why the idea of a toll booth has entered the conversation, you have to understand the shift in Iran's leverage. For years, Iran relied on deterrence, missiles, regional alliances, and the threat of escalation. Analysts note that recent conflicts have weakened parts of that strategy. Military pressure, sanctions, and direct confrontations have reduced Iran's room to maneuver. What Iran appears to have rediscovered is geography. The Strait of Hormuz is not just a shipping lane. It is a pressure point, one with global consequences. Iran has proposed a system in which vessels transiting the strait could be subject to fees, potentially as high as $2 million per ship, framed as part of a broader political and security settlement. Tehran insists this would not constitute a full blockade. The strait, in Iran's telling, would remain open, but conditional. Details of how such a system would operate remain uncertain. What has been reported is that Iran has sought greater advanced disclosure from vessels transiting the strait, including cargo and destination information, and that any payments, if imposed, could avoid the US dollar system. Analysts stress that these measures are not formalized international rules, and that enforcement would rely less on law and more on risk, pressure, and uncertainty. But even the possibility of a toll has consequences. A $2 million fee on a fully loaded supertanker works out to roughly $1 per barrel. A cost economists say would be barely noticeable to consumers on its own. The real impact lies elsewhere. Markets do not react to tolls. They react to unpredictability. Insurance costs rise. Shipping schedules become unreliable. Traders price in risk not just of higher costs, but of delays, denials, and selective access. The burden would fall most heavily on Gulf exporters, whose oil has no viable alternative route to market, producers whose exports must pass through a waterway they do not control. As energy analysts have noted, states would accept such costs only if every alternative appeared worse. At present, many alternatives do. Iran has linked the toll proposal to wider diplomatic demands. These include recognition of its security role in the strait, relief from sanctions, and preservation of its nuclear infrastructure, with restrictions framed as temporary rather than permanent. The United States and its allies reject this framework, insisting on unrestricted navigation and far more stringent nuclear constraints. Neither side appears prepared to concede. The result is a stalemate, not marked by explosions but by waiting. Ships slow, negotiations drag on, and global energy markets operate under sustained uncertainty. Energy analysts suggest that even under optimistic assumptions, shipping volumes through Hormuz may recover only partially, with prolonged disruption keeping prices elevated well into the future. The toll itself is small. The system it implies is not. For the first time, the world is confronting the idea that access to its most important energy artery could become transactional, shaped by power, pressure, and negotiation rather than shared rules. The Strait of Hormuz has always been vital. In 2026, it has become something more fragile, not fully closed, not fully open, and no longer taken for granted.